Yield farming is an important feature in the cryptocurrency market because it allows users to receive rewards through their staking and lending assets within the decentralized finance or DeFi protocol with high interest. This is a great way to earn passive income by lending your assets to others and be returned to you with high interest. But ALF protocol wants to take this one step further by leveraging for an increase of something much bigger than what you can imagine. Hello again, people of the internet, and welcome to another video from Crypto Cash Out, where we bring you the freshest information and news under the crypto space. This video is more of an information type of video rather than a price prediction, but don't worry too much as we will touch briefly on that too. Regardless of that, always remember that we are not financial experts and whatever we say in this video is not financial advice, so it will be wise to do some additional research after you are done with this video. Now that we have that out of the way, let us head on to the video. Alright, if you want more background about ALF is that it is a protocol that is based on the Solana blockchain. It deploys their capital by providing liquidity to various pools or doing yield farming here. In fact, it is a group of protocols created to provide investors and traders decentralized capital in order to maximize the provision of liquidity without leverage. The best part of it is that ALF protocol lets you do yield farming here with a 200 times leverage. If you are not quite sure what leverage is, it adds to the bigger picture of the market and is a key part of what makes ALF unique and some may argue better than other yield systems. This contribution they have for the greater DeFi ecosystem may sound simple, but there is more to it, so let's open a whole new bag to talk about. The first generation of DeFi has come and gone, and we are currently in the second generation of DeFi, which has brought us token incentives for liquidity provision or what we call yield farming and margin trading and leverage positions. But with ALF protocol, they aim to be the bridge from the second gen to the third by giving leveraged liquidity providers in the AMMs on the Solana blockchain. The current team behind ALF protocol is led by Matas Saushanas, and together with the development team, they have a lot on the roadmap, which we will talk about later. In their website, each of the people working on the project and the leaders have linked in their social media and other ways to communicate with them, meaning they have nothing to hide and fear of because of their transparency. They want to be accountable when it comes to the successes and failures of the protocol, and they want to make it clear. Another good thing about the protocol is that they have multiple investments that put their trust in the project. The partnership that they have done will help drive in the future development of the protocol. Here are just some of the investors and partnerships they have made with some companies: Zen Capital, Das Ventures, Deep Ventures, and Scorpio VCs. These strategic partnerships they have made will further boost their protocol and improve as to where they are lacking. They will serve as the liquidity providers and will increase the value of the entire network. The protocol has a lot of goals in mind, such as implementing what was previously mentioned in this video before. However, their ultimate goal is something that also needs mentioning. Their goal is to make the capital work of people be more efficient for them. The project is set to be under the capital efficiency, which involves dividing the average value of output to the rate of expenditure over a period of time. ALF protocol aims to make more liquid markets by connecting low-risk liquidity providers with riskier investors all throughout Solana. This gives you a hint that ALF isn't actually a single protocol, but rather a group of protocols that are working together to connect co-traders and investors with different risk appetites. They do this in order to watch over the liquidity flow and maximize capital efficiency for stakeholders and investors. This, in turn, will add leverage to help yield farming in Solana by giving higher yields, lower rates for lending, lower margin requirements, lower risk of liquidation, and a lower risk of impermanent loss. Even though they are a group of protocols that form the ALF protocol, they are not independent and are interconnected in some way. The ecosystem in the ALF protocol is connected with one another to make things work. In the official white paper for ALF protocol and Figure 4, Cross-Protocol Facility Liquidation by ALF, we can see that there are ALF MMs and allotment ALFs that are also present in the liquidity protocols that the LPs are putting in their investments. In the liquidity protocols, people can borrow and lend here. Inside the ALF protocol is also the ALF liquidity, where it is the entry point of all interactions in the protocol as it enables borrowing, tracking the position held, and keeps the collateral in custody. There are also a leverage protocol that allows users to take leverage on various positions but still maintain balance in the overall system by not posing a threat. These protocols and a couple others work together to reward participants, share liquidity, and keep the system from falling apart. In addition to multiple protocols, there are also different types of users that can interact with the protocol, each with a different function from one another, but all of these are important to help maintain the system and keep it working properly. The first type of end user in the system are the risk-averse investors, or what we mentioned as LPs earlier. Here, there are two types of risk-averse investors, the institutional LP and the individual LP. The LPs want to add liquidity to some pools and earn yield by protecting their principal. The second type of users are the borrowers or traders who just want to borrow additional working capital from the ALF and put their assets as collateral. The third type are the risk-seeking investors who, in the name itself, want to risk their investment in order to earn as much yield as possible by taking their leverage and putting the liquidity into other pools. The last are the arbitrager who wants to work hard to earn money by performing liquidations and help the system stay as efficient as possible. Now let us talk about the tokenomics of ALF protocol. Oh wait, technically they don't have their own coin because they are based on Solana. They do have their own token, but it is not used for transactions and trading assets as one may assume. Because of this, there are people out there who are skeptical about the idea because they don't have their own coin, but remember that since they are based on Solana, one of the biggest blockchains out there, the safety of your money is ensured. Their token called ALF is mostly a utility add governance token with three main functions. The first function of the coin is with the governance of the network. If you decide to stake some of the ALF you've gained, you are able to vote on different proposals similar to the use of treasury funds, what collateral they should support, and what the inflation rate shall be. The second function of ALF is to reward the participants when you lend your money to other people. Because of this lending mechanism, people can be rewarded by a percentage because they lent their money to pools and let it be used as leverage in protocols. Now, in normal network fashion, they also have a tier system that denotes how much token you have staked. The more ALF you take, the higher your leverage is in the system. Other rewards also follow this. In addition to that, the tokens can also be burned and bought back, which will increase the values of the assets being transacted in the protocol. The protocol developers are also transparent on where the tokens are headed. In their white paper, they wrote it so that it would be clear how many percent is allocated to each sector. For example, there is only 2% allocated for the public sale, which is much lower than what other people may want. 35% of the tokens are allocated for the liquidity while 15% are given off as staking rewards. All in all, the total token supply is estimated to be more than 10 billion tokens, and so far, over $5 million are raised and ready to be deployed. And when it comes to the future plans of ALF protocol, they have a lot waiting to be released. So far, they released their plans for the year 2022 and it is already looking stacked. For the first quarter of 2022, they set on releasing the ALF lending system, public IDO, and DEX listing. Before midway through the year, they plan to have DAO governance, ALF money markets, and magnified leverage launch in the protocol. In the third quarter of the year, they plan to collaborate more with institutional lenders and have a trading strategies dashboard. And before the year ends, they plan to implement their leverage system in other chains, meaning it will be cross-chain. We have a video about cross-chaining, so go check that out if you have the time. They also plan to release option hedge strategy and have a total of 500 million total value locked before the year ends. The increased leverage of Solana's ALF protocol will play an important role in how future developments are going to be made. Not only here, but other blockchains will as well. And we can't wait to see what they have in store and how much people will gain because of it. And they are not done yet. No, they still have a box full of surprises waiting to be released and will take the whole market by storm. And we are here for it. Thanks for watching. Hey, you made it this far into the video, which means you really like our videos, so be sure to leave a like if you want to support the channel. Also, subscribe to our channel so you won't miss an upload from us like the latest video we uploaded, which is about change finance, so definitely check it out. Subscribing is free and it takes you only a couple of seconds to do, so please consider subscribing. Comment down below what you are most excited for with ALF protocol and your thoughts about the video to win a shoutout giveaway. That is all from us today. Thanks for watching, and as always, have fun cashing out!